Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi dan salam sejahtera and welcome to this virtual press release. Pada sidang akhbar ini, Bank Negara Malaysia akan menyampaikan taklimat mengenai prestasi ekonomi negara pada suku keempat tahun 2020 dan juga perkembangan moneteri dan kewangan di Malaysia. Taklimat ini turut dihadiri oleh Ketua Perangkawan Malaysia, Datuk Seri Dr. Muhammad Uzair Mahidin dari pejabat beliau di Jabatan Perangkaan Malaysia, iaitu agensi rasmi yang mengumpul dan menerbit statistik KDNK negara. Please allow me to continue the presentation in English. Global growth continued to improve in the fourth quarter of 2020 from the trough in the second quarter. However, growth remained negative for many countries. In some economies, the pace of recovery slowed as COVID-19 resurgence necessitated further retightening of containment measures. In the regional economies, the demand for exports, especially electronic and electrical goods, supported the growth recovery. This outweighed the ongoing weaknesses in services exports, which is still adversely affected by widespread travel restrictions. Similarly, in Malaysia, the recovery in domestic economic activity has been impacted by tighter movement restrictions from the CMCO during the fourth quarter. Let me now invite Datuk Seri Uzair to announce the fourth quarter GDP performance for Malaysia.
Assalamualaikum warahmatullahi wabarakatuh and good morning. Yang Bahagia Datuk Governor, ladies and gentlemen, thank you very much for having me to present the Malaysia economic performance. For the quarter of 2020, the Malaysian economy declined by 3.4%. This bring overall economic growth for 2020 to negative 5.6%, which the largest decline since the negative 7.4% recorded in 1998. Ekonomi Malaysia menyusut 3.4% pada suku keempat 2020. Dengan prestasi ini, KDNK bagi keseluruhan tahun 2020 menyusut 5.6%, yang merupakan penurunan terbesar sejak 1998, iaitu negatif 7.4%. On seasonally adjusted term, the gross domestic product contracted by 0.3% as a gain of 18.2% in the previous quarter. On a monthly basis, the GDP improved to negative 1.7% in December as movement restriction on inter-district and interstate travel in October and November were lifted. The slower growth in the quarter was driven mainly by tighter movement restriction as well as commodity supply disruption. This more than offset the support from continued growth in external demand. On the supply side, most economy sector continue to contract except for manufacturing sector, which register a positive growth in this quarter. The manufacturing sector growth remain positive due mainly to continued robust of E&E production. However, the services sector recorded a larger decrease from restriction on mobility and operating hours. Among the severely affected subsectors were food and beverages, accommodation, transportation, and storage segment, which posted a double-digit decline. The agriculture sector declined further at negative 0.7%, mainly attributed to a decline in oil palm production due to labor shortage and poor weather condition. The mining sector also recorded a sharper contraction, attributed mainly to several facility closures for maintenance purposes. The construction sector continued its double-digit decline following a lower value of work done amid labor shortage and COVID-related shutdown of the construction sites. On the demand side, the decline of the economy was attributed to subdued private consumption and public investment activities. Private consumption remained in contraction, weighed down by weak income condition and the tighter movement restriction. Among the components that registered a strong decline was spending on restaurant and hotel, recreation, household equipment, as well as clothing and footwear. The modest improvement in private investment was driven by capital spending in existing projects, particularly in the export-oriented industry. Public investment continued to decline due to lower capital spending by both general government and public corporation. Public consumption moderated due to a moderation in public government spending. On the external front, net export continued to record strong growth, due mainly to higher manufactured export, particularly E&E, rubber glove, personal protective equipment, PPE. Meanwhile, Malaysia current account balance continue to register surplus by recording RM19.0 billion in the final quarter of 2020, led by higher net export of goods and small deficit in primary income. Export of goods contributed 91.4% to Malaysia overall export and recorded RM217.5 billion. The increase was supported by export of palm oil, rubber and chemical-based products, primarily to PR China, Singapore, and USA. The current account surplus in the final quarter was also driven by the lower deficit in primary income, which narrowed to RM7.1 billion. Malaysia companies abroad earned higher income of RM14.6 billion, mainly on direct investment. Meanwhile, the services deficit widened to RM14.2 billion due to higher transport and construction services payments. The travel account continued to record a deficit amid ongoing international border closure. With that, I end my presentation. Thank you, and I hand over to you, Yang Bagi Datuk Governor.
Thank you, Datuk Seri. A key area that warrants greater focus during this crisis is the labour market. Based on available indicators, the imposition of CMCO in October 2020 has resulted in the unemployment rate edging upwards to 4.8% in the fourth quarter. Jobless claims also increased, particularly in the tourism-related industries in November, before tapering slightly towards the end of the quarter. Notably, job placement rates, which were steadily improving since June 2020, declined since the CMCO in October. Going forward, labour market conditions are expected to remain weak in the first half of 2021, before gradually improving in the second half of the year, supported by the improvement in economic activities. Going into 2021, the Malaysian economy is projected to recover. A key factor supporting growth in 2021 is the improvement in global demand, as the rollout of vaccine is expected to lift consumer and business sentiments. This will boost private spending activity and support the economy recovery. In fact, some economists could approach herd immunity as early as the second half of this year. This could enable the lifting of containment measures and further strengthen the economic recovery. Some of Malaysia's key trading partners have begun rolling out COVID-19 vaccines to the public, and their growth rebound would benefit our economy. In addition, Malaysia's growth prospects will also be supported by a gradual normalization in domestic economic activity, continuation of large infrastructure projects, and the targeted policy support from the government. Following the positive rebound in the second half, Malaysia's exports is expected to recover to record higher growth in 2021. Growth will be supported by the recovery in Malaysia's major trade partners such as the US and PR China. In addition, Malaysia stands to benefit from the robust global demand for semiconductors, to cater to increasing needs for work-from-home equipment, digitalization of businesses, and medical devices. With the projected improvement in global trade growth, manufacturers have also indicated better export orders since the trough in the second quarter last year. On the domestic front, our growth prospects are not without challenges. While the imposition of MCO 2.0 will weigh on economic growth, it is important to note that this is not the same as the previous MCO implemented in 2020. High-frequency indicators suggest that the impact of MCO 2.0 on consumer spending has been markedly smaller thus far. Mitigating factors are also in place to cushion the impact of MCO 2.0. In MCO 2.0, most economic sectors are allowed to operate with SOPs in place, while households and businesses are now more accustomed to the SOPs. Economic activities also continued through online platforms, aided by the various policies introduced to spur economic activities. As such, the MCO 2.0 would be less severe than in 2020. The growing momentum of digitalization will lend further support to economic activities. More individuals and businesses are now embracing digital solutions to future-proof their business. For instance, the number of merchants who sign up for e-commerce and QR payments had more than doubled compared to the previous year. Moving forward, the government, Bank Negara Malaysia, and relevant agencies will continue to intensify efforts to catalyze nationwide digital transformation. This includes accelerating the rollout of key ecosystem enablers, digitalizing existing industries, and developing new digital industries as future growth drivers of the economy. Improvements in investment and production activity will provide additional support to growth in 2021. Investment expenditure is expected to rebound, supported by strong investment intentions within certain segments, as well as the continued implementation of large infrastructure projects. Meanwhile, growth will be further lifted by higher production from existing and new facilities, particularly in the commodity and E&E subsectors. Turning to inflation, headline inflation was at negative 1.5% during the quarter, due mainly to lower inflation for communication services, rental, and fuel. Core inflation moderated to 0.8%. For the year as a whole, in line with earlier assessments, average headline inflation in 2020 was minus 1.2%, mainly reflecting the substantially lower global oil prices. Core inflation remained positive, averaging 1.1%. Going forward, headline inflation is expected to average higher this year, in line with the recovery in global oil prices. Core inflation would remain subdued amid continued spare capacity in the economy. The inflation trajectory, however, would continue to be affected by global oil and commodity prices. The OPR was maintained at 1.75% at the most recent MPC meeting in January. The cumulative 125 basis point reduction in the OPR last year will continue to provide stimulus to the economy. This includes lowering debt servicing, reducing the cost of financing, and thus increasing lending to support growth. Monetary policy will remain accommodative to support economic growth. Going forward, given uncertainties surrounding the pandemic and the impact to the growth and inflation outlook, monetary policy will continue to be determined by incoming information and data. Domestic financial market conditions continued to improve in the fourth quarter amid positive developments, mainly surrounding the approval and deployment of COVID-19 vaccines and greater clarity on U.S. policy following outcome of the U.S. presidential elections. Consequently, the domestic bond market recorded non-resident inflows contributing to lower bond yields and an appreciation of the ringgit against the US dollar. In the equity market, improvements were broad-based across sectors and were supported mainly by domestic investors. For 2020, domestic financial markets recorded an improvement. Positive investor sentiments were anchored by signs of improved economic outlook, which will pave the way for an eventual recovery. Existing monetary and fiscal support will continue to support financial market conditions. Going forward, despite expectations for further improvement in financial markets, risks of heightened volatility remain amid lingering uncertainties surrounding the momentum of global economic recovery. In 2021, developments surrounding the pandemic in some countries, including the US, continue to pose uncertainties for the economic recovery. Sustained net financing growth in fourth quarter with expansion in outstanding loans and corporate bonds. Loan growth was at 3.7%, and this was mainly supported by household loans, which grew 5.4% on an annual basis. Growth in outstanding corporate bonds increased to 6.5% from 4.3% in the preceding quarter, due mainly to issuances from government-related entities and financial institutions. Banks continued to allocate credit where needed, as reflected in the higher loans disbursed to businesses and households. Repayments also increased during the same period. For business loans, disbursements and repayments increased, notably for working capital. This trend was also observed in the SME segment. Loan applications and approvals among businesses also increased, including for investment-related loans. For households, higher disbursements were mainly for the purchase of cars and homes. The higher demand is attributed to the cheaper costs from lower interest rates and economic stimulus measures. In addition, higher loan repayments reflected resumption in loan repayments among some households given the end of the automatic moratorium in the third quarter 2020. Financing activity in the SME segment has returned to pre-COVID levels, with banks remaining a major driver of new disbursements throughout 2020. Disbursement by banks and DFIs gradually returned to average levels after the MCO, reaching 73 billion ringgit in the fourth quarter last year. For the year, 95% of loans disbursed by banks were sourced from own funds, with the Bank Negara funds for SMEs serving as a supplement. Bank Negara funds remain available for SMEs. With the recent upsizing of the targeted relief and recovery facility to 4 billion ringgit, SMEs can still tap into a total 6.4 billion ringgit worth of funds through participating financial institutions. It is also key to recognize that there are other financing schemes by the government and the financial industry that continue to assist SMEs in weathering this challenging environment. This includes the Penjana SME financing and guarantee funds under CGC and SJPP, while financial institutions have been proactively assisting SMEs with the targeted repayment assistance and loan restructuring. Equally important are the debt advisory and resolution platforms that have been strengthened over the years. SMEs can continue to reach out to MyKNP for loan concerns or seek loan restructuring assistance under the Small Debt Resolution Scheme, which has been integrated under AKPK. Overall resilience of the banking system has remained largely intact, with banks remaining well positioned to continue supporting the economy. Banking system capital buffers remain adequate to absorb considerable financial risks. Loan impairments have risen following the end of the blanket automatic moratorium, but it remains low with the extension of repayment assistance to borrowers in need. Impairments are expected to increase further in 2021. However, banks are well placed to absorb losses having already significantly increased provisions for loan losses in 2020. Let me now conclude the briefing. The Malaysian economy contracted by 5.6% in 2020. In 2021, growth is expected to be supported by a pickup in global demand and a gradual normalization in domestic economic activities. While the ongoing containment measures will weigh on near-term growth prospects, the impact is expected to be less severe compared to 2020. Downside risks to growth remain, mainly from developments of the COVID-19 pandemic globally and domestically. Importantly, policy support and assistance will continue to be available to both businesses and households to weather this challenging period. In addition, an effective rollout of the COVID-19 vaccine with herd immunity targeted by early 2020 would provide a lift to sentiments and growth going forward. Thank you.